JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 26th of May 2020, so yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there, and I'll take you to this page, which we, as I said, update on a daily basis. Yep. So yep, I believe you can find something useful here. Now then, a quick update on what's happening here globally. So basically the total amount continues to rise. Yes, of course, we will be hitting now the 5.5 million, or actually we are probably, according to some other reports, we are already there. So unfortunately, of course, but the most important here is, of course, the amount of daily cases here. As you can see, we are after we've peaked here last week, the amount is now declining. The graph is now declining. However, it kind of continues to move in a way like sinus cosinus, and that's why for now, yes, we're not really getting our hopes up too much yet, because again this could end up reversing back to the upside again. So that's why for now, guys, be very careful. Yes, for now it's a good sign. However, if for example if it falls somewhere around here, somewhere below the 70,000 mark per or yeah, somewhere below that 70,000 mark per day, then yep, maybe this could be a bit of a better indication. However, for now it's still above that number. So jumping into a few indices now very quickly. So Nikkei, I talked about Nikkei yesterday in my traders tea time, and I was telling you guys that to keep an eye on this 20,735 barrier, because we were already kind of balancing above it. And yep, today, as you can see, Nikkei kind of continued to push higher, and basically this idea where I've talked about a potential rising wedge pattern, kind of we can skip that for now. Well, we can actually skip that, and we can just leave this upside support line, the short-term upside support line, taken from the low of the 3rd of April, and we like I said, you can see that the index kind of pushed higher, and yep, we are now near this 200-day EMA. So in a way, everything's kind of looking quite positive, and in a way you can see that the index already kind of closed above this barrier, above this 200-day EMA. So in a way, kind of this increases the chance for this index to drift further north. Now initially we will only target the 21,720 zone, which is marked by the highest point of March, and we'll see how it performs around there, because in a way, if it provides decent resistance, then well, we could see a bit of a correction here back down. However, as I said, for now, from the very short-term perspective, yes, we will continue targeting that area. We want to see how it's going to perform, and yep, and then we'll take it from there. In case this index decides to reverse sharply to the downside, we will start looking at lower levels only probably if we get a break of this upside support line taken from the low of the 3rd of April. Until then, in a way, it could continue providing support, and it could kind of help the bulls to join in here again and drive this one higher. However, as I said, for now, we are leaning a little bit more to the upside. In order for us to get comfortable with lower levels, we would like to see a drop below this upside support line. So just a quick also mentioning of the economic calendar today, guys. I mean, it's a bit of a it's a relatively light, and we don't have much happening today. We just have the consumer confidence, the CB consumer confidence from the US, and the new home sales figures as well from the US. So we did just recently got the GfK German consumer climate number, which well, came out as a bit of a disappointment, and it came out minus 18.9, although the forecast was already on the lower side at minus 18.3. So yep, that's not really looking good for Germany. But again, let's see how the German DAX is doing right now, or should I say, I mean, it's still closed, but the futures market is it's open. So let me just basically, looking at this picture here, you can see that yesterday finally we managed to exit this this range where the index was trading in, and we managed to clear this level near the 11,236 zone, and we managed to stay above that as well. So basically all this kind of creating this nice atmosphere here for the buyers. We will continue targeting the upside. We will aim for the 11,447 zone, which is the low of the 6th of March, but we'll keep it also careful. We will target, our main target is somewhere around here, somewhere around the 11,770, or maybe just a little bit above that. However, the area here near the 200-day EMA could be a nice resistance area as well. So that's why for now we are leaning a little bit more to the upside. However, again, guys, be very careful, be very cautious, of course. You know, keep your eyes on the news, but like I said, for now it seems that it's the market is ignoring the China-US kind of tensions for now. For now, of course, that will probably kick in later on. But again, for now, at this point in time, we are seeing a bit of positivity here in indices. And like I said, our next target here on DAX will be somewhere around here near the 200-day EMA or the 11,770 zone, which marks the high of the 6th of March. Jumping into the FTSE, so the FTSE was closed yesterday, and we didn't see any action here. So, but if we take a look at the cash index right now, we can see that the price is currently balancing near this barrier, near this 6,152 mark. And yep, now the big question here is, can this push further north? Now, given the positivity that we saw already in the other indices, in a way, there is a good chance for this one to drift higher. And of course, if so, then yes, we will aim for some of these levels here. Now, one of the important levels for us is the 6,460 zone, but slightly above that, as you can see, you just saw the 6,536 mark, which is the lowest point of 2018. So very good potential target here. But again, we want to see a nice, good, strong, firm move above the 6,152 mark. So let's keep an eye on this one. Like I said, for now, everything's kind of looking quite positive. However, if this index suddenly starts dropping lower and falls below the 5,962 territory, then maybe, well, not everything is good in the bull block, and well, we could maybe see a bit of a larger extension to the downside here, where we could aim for the 5,500 level. But again, like I said, for now, we are, like I said, leaning a little bit more to the upside. Jumping into Brent oil. So Brent oil is showing good positive signs. I mean, yesterday I talked about this one, and I was telling you guys to keep a close eye at these two lines. So a medium-term downside resistance line taken from the high of the 8th of January, and the short-term upside support line taken from the low of the 22nd of April. So as you can see, today we are seeing a nice break of this downside line. However, what I was also mentioning, that we would like to see a nice good daily close at least above the 36.10 zone. As you can see, it acted as a very good area of resistance, and we would prefer to see a nice daily close first before kind of examining slightly higher levels here. So for now, guys, yes, it is quite interesting. It could be quite interesting for the bulls, but as I said, wait for that confirmation daily candle close. Ethereum. Here, I talked about Ethereum last week, and basically, so it can, as you can see, it kind of failed to move above this upside support line taken from the low of the 13th of March, and they tested it from underneath and then drifted back down. So now, what we can have a look at here is basically, well, the cautious approach here could be still from this level, from the 227.50, and then yes, because a break above this would confirm a forthcoming higher high and more buyers could be joining in. However, from the shorter term perspective, if I jump into a 4-hour chart, you can see that the crypto seems to be coiling up a little bit here. So in other words, it's kind of let me just quickly draw this here. So it's basically stuck in between these two lines. Now, oh, there we go. So roughly like this, basically. So in a way, or actually we would need to capture this one. So roughly between these two lines, it's currently stuck in, and it seems like I said, it's coiling up. And in a way, when we do have something like this, that means that we could see a nice exit here, a nice stronger exit, a breakthrough one of these lines, of course, kind of could indicate a further directional move from in the short term, of course. But again, for now, guys, be very careful. And as I said, looking at this picture, for now we will remain neutral. And from the very short-term perspective, what we're going to do here is basically we're going to keep an eye on some of the support and resistance levels. Now, if we get a drop below this little territory right here, the low of the 25th of May, which is the low of yesterday, a break below this, upside support line, and this could kind of open the door towards slightly lower areas. In addition to that, you can see that this would place the price below the 200-day EM, or not 200-day, but 200 EMA on the 4-hour chart. And yep, maybe more sellers could be stepping in here and pushing the pair further south. Of course, then we'll target areas like the 191.30, or even better, the low of the 11th of May, or in other words, I think that's the current lowest point of May, near the 176.50 mark. So yep, keep your eyes on that one. And in terms of the upside, pretty straightforward. We need to see a break of this downside line, and in addition to that, ideally a push maybe above this barrier right here, the 211.50, marked by the high of the 23rd of May, and then yes, higher levels could be met in the short run, of course. Jumping into ADJPY, and let me just jump back into a daily chart on this one. Now, looking at this picture, as you can see, I talked about this pair yesterday, and I was telling you guys to keep a close eye on this barrier right here, the 70.17. And as you can see, we had already a nice rebound. Yesterday, the pair failed to kind of move below it, and yep, it's now pushing. The pair this morning is now trying to push higher. Of course, the positivity and the equity markets is kind of helping this pair to move higher, because people are jumping out of the safe havens, and safe havens like yen and Swiss franc, and jumping into more like riskier assets. So yep, and here we can see that yep, AUD JPY is trying to make its way higher. However, as I've mentioned previously, initially we're not going to drag this one too much to the upside. We're going to aim initially only for the high of the 3rd of March here, which is roughly around the 71.51 territory, 51-52 zone, roughly around there, and slightly above that we do have that 200-day EMA as well, which could provide a bit of resistance. So basically all this territory could provide resistance, so that's why be very careful. For now, yes, we are leaning a little bit more to the upside, but only we will aim for this area right here. And then after that, we'll take it from there. US dollar against the Japanese yen, so similar story here, but you can see it's a little bit of a mess, to be honest. I mean, let me just probably last time I talked about this 107.50 zone, because what I was saying that in a way, if it continues to provide support, and it did, as you can see, neither of the daily candles managed to kind of recently close below it, so we did get an overshoot, but the 21-day EMA here kind of helped out the bulls, and you can see now the pair is pushing back up. So for now, we are a little bit leaning more towards the upside. You can see that there is a good resistance barrier here near the 108.08 level. As you can see, it acted as it held the rate from moving higher from like the 16th of April. So it kept on knocking on the door of that level, but then kind of failed to break above it. So in a way, if you wish to be more on the cautious side, you could just wait for a break above this barrier here, the 108.08. This would also place the rate above the 100 EMA here on the daily chart, and maybe higher levels could be met. But again, we do have the 200-day EMA here as well, so so yeah, be very careful for now. Of course, our main target for now is the 109, the 109.38 zone, which is marked by the high of the 6th of April. And yep, for now, the downside is slightly off the table. It seems like that unless it starts falling back below the 107.50 mark. So yep, for now, like I said, guys, we are more bullish than bearish. For those who are more on the cautious side, you can wait for a push above the 108.08 level, and then yes, we could consider higher levels again. But yeah, for now, like I said, we are a little bit more bullish than bearish, but unless this pair starts reversing back down sharply and drops below the 107.50, now this is where we could consider a bit of declines in the near term, of course. US dollar against the Canadian dollar, and this is what happened. This is one of the scenarios that I talked about yesterday. Basically, if the 1.40 level continues to provide resistance, then yep, this is what we could get, and as you can see now, it's drifting lower. However, as I've mentioned before, that although we are seeing a bit of a descending triangle here, still preferably we would like to see it drop below the 1.3856 zone, which, as you can see, continues to act as a very good area of support, and only then we could aim for lower levels. Until it's kind of trading here inside this pattern, we're going to remain neutral. We're just going to observe the price action. In order to aim for higher levels, well, again, a break of this downside line would be required, and in addition to that, just for that extra confirmation, a push above the high of the 14th of May could do the trick for more buyers. GBP USD. I haven't looked into this one for quite a while, but as you can see, from the short-term perspective, the pair kind of, after it dropped here towards this 1.2077, it then reversed to the upside, made its way higher, hit the 1.2296 mark, and then drifted back down. However, it failed to move towards this 1.2077 zone, and this is what I talked about last week when I was covering GBP USD, because what I was saying that after when we started seeing this slide, this correction lower, kind of what I was saying, that in order to aim for lower levels, we would prefer to wait for a drop below this level, because this way the pair would confirm a forthcoming lower low, and yep, lower levels could be met. However, as you can see, it drifted lower, but it created a higher low, and now it seems to be willing to push to the upside. That said, we will take a bit of a cautious approach and probably just wait for a push above this high, the high of 19th of May, which is roughly around the 1.2296 zone, and then yes, and then we could consider higher levels, because at the same time the pair would be placed above its 21-day EMA, and maybe more buyers could be joining in here. So keep your eyes on this one. Like I said, for now we will take a bit of a neutral stand, but from the very short-term perspective, if we get a push above this 1.2296 territory, territory, then yep, maybe we could consider a possible move initially towards the 1.2467 or even the 1.2650 territory. But again, for now, like I said, guys, be very careful because it's still very tricky. Keep your eyes on these two levels. Euro CHF. So this one, I talked about this one last week a lot, and basically last week we had a nice push on Monday here to the upside. It then drifted back down, corrected back down, and basically now you can see that the pair seems to be forming a nice bullish flag here. So in a way, kind of this could lead to some higher levels, but again, as the same idea applies as last week, we could aim for higher levels here, but the upside might get limited near this downside line, because don't forget that we're still below this downside line taken from the highest point of April 2019, guys. So yep, in a way, like I said, we can only target this area for now, and then after that, if we do see a test of this downside line, we'll take it from there. We'll reevaluate everything and see if it can push further north. Ideally, in the scenario here, looking at this daily chart, we would like to see at least a daily candle close above the 100 EMA here, shown as the green line, because as you can see, last week, for example, it kept overshooting it, but it failed to close a daily candle. So if we get a nice daily candle close above this 100 EMA, which is currently roughly near the 1.0630 mark, then yes, higher levels could be met. But again, higher levels only up until this downside line. And finally, Euro USD. So yesterday I talked a lot about this level, the 1.0875, and as you can see, it failed to move and failed to stay below this level. So in a way, now we're seeing a bit of a push higher. This is the scenario exactly what I was talking about yesterday, where what I was saying, that if we get a nice drop below this and we get a nice daily close below this level, then yep, we will aim for the lower side of the range here. But if it fails to do so, then yep, maybe we could see a push back to the upper bound of the range where the pair is currently stuck at. However, we will still take a cautious approach and wait for a push above the 1.0990 level in order to aim for higher levels, because here what we don't want to see here is we don't want to get caught out here on a possible kind of move higher here, where let's say if the pair drifts a little bit further north, pushes higher, fails to, let's say, get closer to the 1.0990 level, and then reverses back down. So this kind of higher low could be ignored, and yeah, we could see a drift back down. But again, with the downside, as I said, we need to see a drop below the 1.0875 territory, and then yep, we could consider a move towards this lower side of the range. So guys, I really hope you found it useful, and thank you very much for watching and listening. Thank you for joining in. I really appreciate your time. If you want to catch my video later on, my traders tea time, as always, 13:15 GMT. For now, guys, I hope you have a beautiful trading day. Stay safe, be very careful, and yep, let's catch up later. Thank you very much, and bye-bye.